Everybody, welcome to Squawk Box right here on CNBC. We're live from the NASDAQ market site in Times Square. I'm Becky Quick along with Joe Kernan and Andrew Ross Sorkin. And if you've been afraid of waking up and seeing what the markets look like today after the last 3 days of action, well, guess what? The sun is rising today. And the markets are actually in the green pretty substantially. The Dow futures are indicated up by about 650 points. S&P futures indicated up by just over 60 points. The NASDAQ indicated up by 153 points. Of course, this comes after a head-spinning day on Wall Street yesterday. The U.S. markets saw their highest volume day in at least 18 years, trading more than 28 billion shares yesterday. Well, through all of it, it was a pretty wild ride. You saw some ups and downs, and the biggest moves that we have seen since 2015, intraday moves to the upside, to the downside. There was about 2,500 points that you covered over the course of that period of the day. Again, where we stand right now, the Dow futures up by 625, the S&P futures up by 60, the NASDAQ up by 136. Treasury yields this morning, let's take a look at where they stand. The 2-year, 10-year spread has widened. It was more than 40 basis points. This morning you see the 10-year at 415, the 2-year at 373, and of course the 30-year all the way at 4.6%. Watching these very closely, Treasury yields came down pretty substantially and then rebounded through the course of the day rather substantially as well, too.
Meantime, let's talk about what's going on with China, because they are now vowing a strong response to President Trump's latest threat to escalate tariffs. According to CNBC's translation, the country's Commerce Ministry calling that a, quote, mistake on top of a mistake. The ministry is saying if the U.S. insists on its own way, China will fight to the end. Now, the comments coming after President Trump said he'd hit China with an additional 50% tariff if China doesn't cancel its retaliatory 34% tariffs on American products. Take a look at President Trump in the Oval Office yesterday talking all about it.
Would you be open to a pause in tariffs to allow for negotiations?
Well, we're not looking at that. We have many countries that are coming to negotiate deals with us, and they're going to be fair deals, and in certain cases they're going to be paying substantial tariffs. There'll be fair deals.
That's your first. Now, on the subject of the talks, the president said there can be permanent tariffs and there can also be negotiations. We're going to talk a lot more about all of this, tariffs and everything else, at 7 a.m. Eastern Time with the man in the middle, the Treasury Secretary, Scott Bessent. He's going to join us right here on Squawk Box Live, so lots of questions for him this morning.
You know, yesterday we spoke with Peter Navarro, and his take was that this was not a negotiation. Right. We were going to see that within a matter of hours. You heard that the Treasury Secretary was going to be negotiating with Japan at least, and we will hear from him where these things stand. But that's been the biggest confusion point on Wall Street is, are these real and permanent? Are they a negotiating tactic? And where do we get there? Depending on the day, depending on which administration official you're speaking to.
I think there's the Navarro camp and the Lutnick camp on one side. I think there's the Bessent and maybe even Elon Musk camp on another, which is say negotiations, and the goal is to try to get the rates down to as low as possible. The camp that I think we all don't know about is exactly which one President Trump is in, because he's talked about this being a negotiation, and then he's also talked about them being permanent forever.
I was going to actually talk about this, but I see it's in the, we actually have it's scripted, but then we'll talk after. But speaking of Scott Bessent, the Treasury Secretary, Politico is reporting that he flew down to Florida over the weekend to encourage President Trump to hone his message on negotiating trade deals, or else he would risk a further fall in the financial markets. And the operative term there is negotiations. Elon Musk also reportedly reached out to President Trump. Washington Post says Musk made direct appeals to the president to reverse course on his widespread new tariffs, but proved unsuccessful. In another development, Senate Majority Leader John Thune told reporters he doesn't see a future for a bipartisan bill introduced last week that would limit presidential power to impose tariffs. Senator Rand Paul has some very pointed remarks. He's going to be on later today, and we can talk to him after we talk to Scott Bessent, and we'll see whether he is very forthcoming about what he told the president in Florida, or, you know, with President Trump, it's best to, if you're going to, I'm not saying disagree with him, but if you're going to point out to him there are some nuances to what he's doing, it's best to do it in a fairly conciliatory way. So, but we'll see. I think he went down and said, listen, Mr. President, no one wants a permanent tariff structure in the United States. And the whole reason you're doing this, and really I think the reason that they settled on that weird reverse engineered formula, which makes everything look worse, so they could, their opening bid could be much higher than it would have normally been thought to have been, and it leaves room for negotiation. That's what everybody...
An anchoring technique is what he likes to call it.
An anchoring technique, but, you know, listening again, Navarro made the rounds everywhere yesterday, and he was basically saying, we don't care if it's 0-0, that there's so many other impediments to free trade in all these places. So I don't know what the end, I don't know what the, if the end game is zero trade deficits with every country in the world, that's never going to happen because it doesn't work that way. But I don't, you know, that's...
There are implications about what that means. The trade deficit that we run with countries, they often reinvest in the United States through that, whether it's buying treasuries or sending investments here from some other perspective, too.
And you saw Larry Lindsay yesterday, the whole idea of comparative advantage, it's a real thing. And it's what, you know, it's... Globalization had some unintended horrible consequences, admittedly, but we're never going to make certain things here. Even if you got zero tariffs, how are we going to pay workers here $2 an hour? There's going to be places in the world where things are going to be made that we import.
And Navarro's point yesterday was they should get rid of things like the VAT, the value-added tax, but you know, that's a tax that doesn't put us at a comparative disadvantage because everyone there pays it as well. It's basically a consumption tax.
And it's different.
It's like a sales tax.
Different in every place. So you could spend how long talking to the EU about what they do? You'd spend 6 months doing that. You could spend the same amount of time, you know, talking to the UK. Right. You could spend the same amount of time talking to India. Japan. Japan. And then you take Vietnam. China, you could spend... And we're doing it all at once, and we're doing this brinkmanship with China, which is not going to end well, I don't think. President Xi, you can't push him around like that. Everybody's got to, especially when, you know, that culture, saving face. I mean, so I don't know how you do it all at once.
It's not the only place that's saving face.
We need more time for, bring Scott on now and go right to
9 o'clock, exactly.
But I want to hear Rand Paul and Ray Dalio and everything else. Pretty interesting lineup.
It is. Today. In the meantime, Apple is planning to temporarily source more iPhones from India to send to the United States in a bid to offset the impact of President Trump's tariffs on China. That's according to a Wall Street Journal report that says Apple is hoping to win an exemption from Trump's Chinese tariffs and currently views the state of play between the United States and China as too uncertain to make drastic changes to its supply chain. Bank of America analyst Wamsi Mohan told the Journal that Apple could meet about half of this year's U.S. demand for the iPhone if it directed all India-made phones to the United States. By the way, Apple lost another 3% yesterday. It is down close to 19% over the last 3 days, which Goldman Sachs says is its worst three-day stretch since 2001.
Just 2 points on this, because I think it's like illustrative of the situation. It's not that Apple is going to ultimately move its manufacturing back to the United States. It's just going to choose whether it's going to do it in China or whether it's going to do it in India or whether it's going to do it somewhere else. And then the second piece is the game of chicken we've all been talking about, which is if you're Tim Cook and you don't know whether this is going to go on for 6 months, a year, 2 years, you don't know whether the courts are going to get involved and say that the president doesn't have the power to do this. You don't know whether Congress is going to turn around and ultimately say, we don't like this. You don't know if after the midterms, somebody else is going to turn around and say, we're not doing it this way. And so if you were going to make the bet to bring your business back here or even to take it from China to India or whatever it's going to be, there's so many sort of uncertain decisions. There's no decision you would make today. You would wait this out and say, you know what, if it costs me marginally over the next 2 years, it's a better bet to wait to figure out what's going to happen, even if I'm wrong, than necessarily anything else. And that unto itself is a form of paralysis. A form of paralysis is not good.
The whole question is, why would zero tariffs on our side and our trading partner side, why would that cause everything to be built here?
And the answer is it wouldn't.
That's what I mean.
Yeah.
So
Well, the
if
cost-
that's the end result, and not only that, it's 1 year, 2 year, 3 year, 4, I don't know how long it takes to do that, change supply chains and retrofit factories and everything that they want to do.
Oh,
But just-
something like this for an Apple to
But
come
just
here
zero-
or something would be 3 to 5 years.
Yeah,
more.
but just 0,
Doesn't get you there.
there'd be no, you'd still build it over there. You'd just be able to sell it. It might even make it easier to build it over there. And what is your point, that the labor cost would never be
I'm saying
here?
it's not
Why
clear
would
that you
Apple
bring it
not?
here. The labor,
Why would Apple
the labor
never
costs
bring it
here
here?
would.
There's not even the labor market at this point.
Right,
We've got-
right. So there's so
Well, no,
many,
now they're saying that the laid off federal workers are going to be the manufacturing workers.
right, because they have tooling precision skills. Exactly. So no, well, all I'm suggesting is
Why wouldn't
there's
Apple?
a-
What's your point on why Apple wouldn't move manufacturing back here?
Well, because
Labor.
because of labor is one of the costs.
What
But the
else?
other thing is you're not. No, I'm saying I'm saying it's a 5-year bet. No matter what you're doing. If
But
you're
they're
bringing-
not moving here. You said they'll move to India. Or
They'll move to
somewhere.
India or these other
Why
places.
not here?
Because the costs here are too high.
Because of the labor.
That's a huge,
Saying the same thing. Well,
huge,
what
huge
else?
component part.
If you could do it here, you would, but you can't pay people what you pay
But they
the hourly
already
rate.
have some operations in India. They've
They've already right. They've
But
already invested in factories.
yeah, but what is it per hour in India? The fraction of
But there's also just the cost of actually building the factory.
Which, by the
that
way,
too.
is why.
But if you're going to build it in
UAW is so
India or
excited about this.
build it in here, the cost would be.
But that's why the UAW was so excited about this, because labor costs, they have been the ones who have borne the brunt of it. If it's $70 an hour on average here versus $8 an hour.
Well, they get it,
In
they
Mexico.
get it coming one way, and they get hit going the other way with all the parts there. That's one of the lead stories in the Journal is how badly Detroit is going to get hit by what presumably was meant to help them. Coming up, the latest market take. This will be good, from Tom Lee. He's going to join us after the break. And here are the stocks leading the Dow higher this morning. United Health jumping on the Trump administration's plan to raise the Medicare payment rate by 5%. Among other things, stay tuned. You're watching Squawk Box on CNBC.
Frank Holland, Worldwide Exchange, CNBC.
I was studying molecular biology, going to grad school. I started investing a little money for my dad, and I got bitten by the bug. I was a stockbroker, and it's fun, but we all wished we could just follow the markets and talk. And my ambition was to be able to pay my bills and not have to constantly be selling. In today's world, I would urge a lot of people to get financially savvy. Squawk Box and CNBC, it is my home. It's the greatest job in the world.
My side hustle brings in over 6 figures.
About $10,000 a month.
Over $500,000 since its beginning.
Find your hustle with CNBC Make It's new online course, How to Start a Side Hustle. 3 industry experts break down proven paths to success
There's a tremendous amount of opportunity out there.
and help you choose the one that fits your life, schedule, and goals.
Find your own path to building multiple income streams.
Go to cnbcmakeit.com/side hustle to register now.
Good money.
Everything seemed legit until it wasn't.
Good times
The lavish lifestyle, the houses that they're used to.
is never enough.
Someone who has a goofy social media presence could be laundering $4.5 billion worth of Bitcoin.
Fame, fortune, and fraud.
His stories were so good, they've all fell for them.
I believe in getting justice.
American Greed on CNBC.
The climate crisis is a gun to our head, so we better get our act together.
We meet those at the forefront of creating a sustainable future.
Our work has been accelerating, and we've now hit 43.7 million people rather than kind of traditional charity. It's more about empowerment.
Climate change is like the internet. It gets bigger every year, it never goes away, and you have to learn to make money from it.
In the last 10 years, we've seen a very encouraging sign of much more products coming online into the market in terms of green and sustainable products.
An issue that affects every generation.
These kids, it's great they're fighting for their right to have a planet to live on. You've got to scream to be heard. You don't just sit politely and go, oh, I can have a conversation about pollution, please.
Soil is not our property. It's a legacy that's come to us from previous generations. It's very important we pass on living soil for future generations.
There is hope for the future.
but only if we take action and take action now.
Join the sustainable future only on CNBC. Tiny homes.
Welcome to my tiny house in Atlanta, Georgia.
One woman makes big money with a very little house.
Pretty spacious, honestly.
Plus the Big Apple's version of living little.
My 95 square foot New York City apartment.
And downsizing to unlock a better life by the beach.
No regrets about moving into a tiny house. There's no room for excess or unnecessary objects.
That's all next on Unlocked.
There's a futures still up over 600. A new note to investors. Fundstrat head of research Tom Lee saying, we want to apologize as the terms of the tariff liberation day were far worse than we expected. Tom Lee is a CNBC contributor, and he joins us now. But Tom, when you try and do direction and duration in the same way, we always go, I don't know how you expect to do that. So in this point, at this time, you didn't really anticipate that formula, I think, that was going to be used to arrive at such high tariffs, kind of maybe got blindsided by that to some extent. But with that in mind, you still think we're starting to see signs of a Trump put as of yesterday? Maybe the NASDAQ closing higher is an indication?
Yes, that's right. Markets are stretched to the downside because we lost, almost 13 percentage points in 2 trading days. As you know, it's almost like the stock market and the economy was delivered a heart attack from the terms of those tariffs. So I think that there is a bounce underway. Mark Newton, our head of technical strategy, views this as a technical rally. I think something that can take us, to recover towards 5,500 or something like that. But I do think that there is, the challenge is going to be, we don't have a fundamental clarity and sort of the all clear enough for us to say that that's going to push us back towards new highs. So I do think we're kind of stuck in the near term, but yeah, I think markets overreacted to the downside. And yesterday, it does look like the messaging has switched. The president has moved towards to letting people know they're negotiating. And I think that's a return or a quiet return of the Trump put, because I don't think they want markets to continue to have this heart attack.
So you many times talk about your technical analysts, and a lot of times that doesn't involve trying to gauge what's going to happen with fundamentals or certainly not policies. But in this case, you got blindsided a little bit by something totally unexpected in your view for the size of the tariffs or the level of the tariffs. Why do you feel confident that we're in negotiation phase now and tomorrow we might be back out of negotiation phase? You could get blindsided again, Tom, and then that would throw off your 5,500 target, wouldn't it?
Joe, that's right. One of the things, we spent a lot of time talking to investors between Wednesday, Liberation Day, and over the weekend. And, it's clear to us investors feel that not only were these tariff levels absurd in the sense that it was very difficult for people to understand the calculation, but it really did break a covenant with capitalism. The idea that businesses need stable and predictable regulations. Many companies moved their supply chains in 2018 because of the need to move away from China. And now they have, potentially trillions of dollars of stranded capital again because of these tariffs. So I think that that's the seismic shock that's very tough for markets and the trust that's been broken. It doesn't mean that we can't see a level of clarity that helps restore that trust. And so markets, after this waterfall decline, one scenario is a V-shaped bounce that takes us back to the previous levels. But the reality is it's going to, I don't know what that sort of clarity that's required for that is. So I think it does feel like this will take some time. And one very good friend of mine is Tom DeMark, and he says this reminds him of 2011. I think that that's not a bad way to look at it, that it's going to take a little time for markets to regain some trust.
But we did see, Tom, that huge roar back yesterday on the false rumor that suggested that they were going to pause, the administration would pause for 90 days while doing this. So the market may have broken trust, but it's very eager and really hoping, it sounds like, for some relief to come from this.
Yeah, I think so. I think that there maybe were some, that's almost, if that was a trial balloon, it worked. It showed that if there was conciliatory actions that were sort of friendly to businesses, that the market could have a massive, massive move. The idea of like an exporter tax credit, these things really can restore confidence, because at the end of the day, the entity caught in the middle of this has been companies, and the capital that they've invested, they need to earn a return. That hurts shareholders, but it also hurts all the employees that work at these businesses. So I do think that the ripple effects, looking back, it does make sense why the market had a heart attack. But of course, this also means parts of this is very fixable, but it does mean that there's, a bit of time involved.
I don't think the administration really planned that trial balloon the way that it kind of worked, but there's no doubt that they were paying attention. I would think it's like, wow, look what can happen in 5 minutes. You go from down 800. Let me just ask one other thing, Tom. So we negotiate with the 70 countries and we'll ask Scott Bessent about it. What if China becomes, it's called a trade war, and the language we're hearing on both sides, it actually sounds like it could be headed for a war. So if we're, if the Trump put involves the idea that we're negotiating with a lot of places and things just get worse with China, would that change your calculus on the Trump put?
Well, 7 countries represent about 70% of that trade deficit. Outside of China, I think the EU and Japan, Korea, Vietnam, Canada, Mexico, I think we're heading, it looks like we're heading towards something that's acceptable to both sides, and really that leaves the U.S. in a better position. I think there's a possibility that we don't ever resolve this with China, so, there's going to be an attempt to maybe build the supply chain or isolate China. I think that's acceptable for markets as long as that's actually what's.
So we don't need China to say, okay, whatever you want, Mr. President. Andrew?
I was going to ask him a totally different question, because we always talked about crypto and Bitcoin and gold and all sorts of other things that are supposed to represent where we really are. Tom, you have a take on the Bitcoin story, the gold story, what that even says now about this moment, what it says about crypto or anything else about being a, quote, safe haven or not?
Well, I think this episode's really highlighted the value of being diversified, because gold has done really well. Bitcoin had been doing well until Monday, but Bitcoin is a good source of diversification in the sense that it isn't subject to tariffs. The drivers of Bitcoin from here don't have to be correlated to how the trade war resolves itself, but it does require, liquidity to return to normal. I think there were so many margin calls over the weekend, it did cause Bitcoin to have a temporary blip. So we're still quite constructive on Bitcoin. I think the move for Bitcoin from here back towards over 100,000 is actually easier than it is for the S&P to get back to the old-time highs.
Well, 5,500 on the S&P, it'd be like, what was all that about then? And all the recession fears and the end of the world fears. Maybe the economy at that point shows maybe some shakiness, but certainly you would see Goldman Sachs and others take their recession forecast back down. At this point, it's been a market phenomenon, hasn't it?
Yes, yeah, I agree. Companies are really resilient. So if the resolution is quicker, I think markets can stage a big rebound. Plus, as you know, because of the tariff risks, and over the weekend, it's kind of pulled forward activity. So companies probably have more cash on their hands now than they expected because of these tariff worries.
Okay. All right, Tom Lee, thanks. Appreciate you coming on this morning and just going over what's been a crazy couple of weeks for everyone. Appreciate it. Thanks.
Tom, has it been so crazy? Is that why you're not here today? Because you've been working so hard over the last few days?
I'm actually out in Arizona for a conference. Otherwise, I'd be glad to be there.
Well, we appreciate your getting up extra early for us. It's great to see you. Thank you.
Thank you.
When we come back, Shopify making a push to infuse AI throughout the company. It's essentially saying, see if AI can do it first before asking for more resources. We have that story and much more coming right after this break.
CNBC. Live ambitiously. Global markets, up to the minute, front page news. Wake up to Frank Holland and worldwide exchange. CNBC.
In the age of digital disruption, get fresh business perspectives on the fast-changing world of tech, innovation and startups from one place. CNBC.com/technology.
CNBC is on assignment in Barcelona as Spain once again plays host to the Mobile World Congress.
We have all this kind of wildfires everywhere. You know, there is the need for data centers, there is the need for more computation power, there is this need for AI, there is the need for connecting the world to bring businesses together, there is the need for consumers to have faster access. And for all of this, you know, we are kind of firefighters trying to solve that problem, but we have a leaking hose here in Europe, because the regulatory environment is not fitting.
I think it has created a different thinking. The momentum's still there. Large language model continue to be prevalent.
AI is such a compelling technology. Every country in the world is going to pursue it. I think it's an imperative that the Western world lead in innovating in this new technology. That means investing in compute so we have the best infrastructure. It means investing in data so that the models can be trained in innovative ways.
Journalism was always the perfect career for me. I've always been an egghead and a nerd. When I'm covering tech, my job is to really take these wonky and complicated topics and distill them down so anyone can understand. Ambition definitely fuels the tech industry. There's still this air of possibility when a new tech product comes out, that it can do anything, that can change the world. There's nothing better than breaking news, jumping on camera and telling everyone immediately what they need to know. I love what I do. No day is the same. I couldn't imagine doing anything else.
Swiss luxury watchmaker Omega did send their Speedmaster Professional to the moon in 1969. More than half a century later, Omega is partnering with Swiss startup ClearSpace to support a world-first initiative, cleaning up debris from space.
For 60 years we've been putting satellites into orbit, and we essentially don't remove them.
One of these big pillars of our DNA is of course, the space odyssey. Looking at this, Omega always been very much involved in what's happening in the sky. You know, in 1962, we had the first ever Omega in space by Wally Schirra, his own Speedmaster.
Most of our economy depends on space infrastructure. We cannot live without them anymore. So what we need to do is create an environment that is just self-sustaining. We don't yet have the exact launch date. It's probably going to be more around 2028.
Sponsored by
Good morning, everybody. Welcome back to Squawk Box. We're live from the NASDAQ market site in Times Square. Take a look at the futures this morning. Dow futures are actually up by more than 700 points right now. S&P futures matching that. They're up by about 74 points. And then you've got the NASDAQ up by over 200 points. It does come after an incredibly volatile session yesterday. But the NASDAQ actually ended in green yesterday, which was pretty shocking given where you'd seen the futures throughout the course of the day. VIX is obviously elevated, and we'll watch that today, too.
Definitely the most, I don't know whether it's oversold, but definitely the one that's taken it the toughest of the big three, the NASDAQ. We have a new look at how small businesses are faring in this economy. Senior economics reporter Steve Leisman joins us with the latest NFIB survey. Hey, Steve.
Morning, Joe. Yeah, the NFIB Small Business Optimism Index falling for the third straight month, giving back most of the initial gains from the election of President Trump. You can see here the National Federation of Independent Business saying their optimism index dropping 3.3 points to 97.4. That's the biggest monthly decline since June 2022. The index remains above where it was in October, but well below its December peak. 7 of the 10 components falling, most notably the job creation plans. That's one we have to watch out for. The expectations for higher real sales declining. Plans to raise prices did go up, and minus 16 or down a net percent of 21% who expect the economy to improve. That's the third consecutive monthly decline, the largest since December 2020. We're watching these employment numbers. Plans to increase employment dropping to its lowest level since April 2024. That could reflect how a decline in sentiment might show up in the real economy with less hiring. It may also reflect difficulty in finding workers. There are now multiple business surveys looking like they did either at the start of the pandemic or before the Fed launched its big rate hikes in 2022 to cool the economy. So that seems how businesses processing all these tariffs is a pretty massive break of uncertainty and a break on economic activity, at least until the situation is more clear. Joe, just a note, these are Trump's people, this NFIB crowd who does these things. They didn't like Biden at all. They shot up when Trump was elected. The other thing is I wonder if there's a miscalculation here on his part, because these small businesses can't do what Tim Cook's doing. They can't look around and go from like, oh, I was in China, oh, now I'll go to India. They don't have that option at the small business.
Right. Since the beginning of time, I don't think you could say that tariffs were necessarily what these people would like. You know what I mean? We shouldn't really use these people, but I see what you're saying. You know what I mean? Usually the other side that like tariffs. So I don't think it's really it's not hard to understand. I don't know who likes, who's really 100% behind tariffs. Well, it's hard to find business owners. I mean, Milton Friedman,
yeah.
Ronald Reagan. I mean, I got the quotes.
Elizabeth Warren, she was talking about how terrible these tariffs are.
Well, I figured she'd like them. She's wrong about everything else, but
apparently,
you know what I mean?
Apparently,
yeah.
you're from the far left if you don't like tariffs. Look, I mean, I get it. I get that there needs to be somehow to address these places where the
that's no longer true. Who do you think? Why do you think these things are getting written now? Wall Street. In public and private, the biggest names in high finance are trying to get a message to President Trump.
No, that's fair.
Stop the markets. Those aren't far left.
No, that's
liberals.
right. I agree. Yeah. You know, Joe,
it's on the cover of every paper today. Yeah.
Yeah. The funniest thing I saw was, and this gets to how do you value companies in this world? J.P. Morgan, it was such a shock, such a fast shock. J.P. Morgan put out a worksheet for its investors to use to value companies with the new tariffs because nobody's had time to do it. So it said, folks, we couldn't do this in all this time. You can do this at home, though. And it gave this whole spreadsheet where you could plug in the numbers for each company. And that's where we're at right now, is this interesting discovery process.
Thank God.
Correlate formula as we saw for the tariff?
That's where they got that on AI, supposedly. That's the rumor. But thank God AI came along just in time to negotiate. You know, to take Japan's average tariff rate of 4.3% and get to 46 is not easy. You got to do some reverse engineering to do that. All right, Leisman, see you later. Thanks.
Okay, coming up, as we've been mentioning all morning, we have the interview of the morning, and it's coming up in just a moment. Treasury Secretary Scott Bessent, he's going to join us in the 7 o'clock hour, an interview you cannot afford to miss. So many questions for him about tariffs and so much more as we head to a break. Check out shares of CVS Health, company just announcing a transition plan for its CFO and providing a financial update as well. It expects financial results to meet or exceed now its previously issued guidance for the full year of 2025. The stock already higher. That after the Trump administration announced much higher private Medicare payment rates than had been expected for 2026. We're coming right back after this.
Be first on world markets, first to the global business conversation. Get a jump on the investing day every day with Frank Holland. Success starts early. Worldwide Exchange, CNBC.
My desire to keep learning, that is what drives my ambition. I sought a career change after 5 years working in corporate law to pursue a passion, which is to tell people stories and help our audiences make sense of the world that we live in.
This is a good global debate.
There is no place in the world where we get the kind of access to so many amazing interviews.
To be able to solve problems at a scale that nobody's ever imagined.
This industry is going through a renaissance.
How big a game changer is this?
Let's go.
Squawk on the Street, CNBC.
Saying he's going to hit China with an additional 50% tariff if the country doesn't stand down from its 34% retaliatory tariff now on the U.S. Investors trying to figure out what comes next. Joining us right now, one of those people trying to figure out what comes next, Libby Cantrell. She's PIMCO's Managing Director and Head of Public Policy. So what does come next, and what do you make of the market move this morning?
Yeah, we were just talking about that. Maybe a little bit of optimism that this is not going to be as sort of bad as people expected, that maybe there is going to be some room for negotiation. And that's been our view all along. We sort of characterize this glibly as kind of transaction man and tariff man. Mm-hmm. And there will be sort of tension between the two. And then, B, I think that there probably is maybe some optimism that he doesn't go through with these more punitive tariffs tomorrow. My own view, I don't think that's warranted. I think he is absolutely determined on putting these higher levels on these individualized countries. And we can argue about kind of the tariff rate that he is using. But I think what I have found is our clients sort of dismiss or maybe underestimate just the deep-seated ideology that underpins these threats. I mean, President Trump has believed this. He said this in the Oval Office yesterday. We've been talking to the clients.
Okay, so if you're right, though, if we're all sitting together in 6 months from now, what does this all look like to you?
Yes, I think that is what we are trying to guide our clients to. What is sort of the ultimate destination? It may not be 6 months. It may be 2 years. But in terms of the ultimate destination, we think the baseline tariff, the 10% baseline tariff is here to stay. That is something that President Trump ran on. He believes on. It is also, if you really do want to kind of rebalance trade, a universal tariff arguably is a more effective way of doing that if that is your ultimate goal. And then these sort of sectoral tariffs, the 232 tariffs on autos, on aluminum, on pharma, on chips, we think those are likely here to stay. And then all of this thing around the edges, which I know are big around the edges, will be subject to negotiation. The higher tariffs on China are likely to stay as well. So the end game is going to be a much higher tariff rate, effective tariff rate.
But let's walk through a different issue, which is you're a business leader today, watching this broadcast, trying to figure out, you manufacture goods or do business internationally, and you're saying to yourself, okay, these new rates are here. 10% is here forever, and maybe I'm in pharma or I'm in something else that actually is going to be tariffed in a more meaningful way. Are you saying to yourself, I'm bringing this business back to the U.S. and I'm going to invest here? Are you saying I'm going to move it from China to India because at least the rate may be lower and I don't need to worry about? Or are you going to say, you know what, I'm going to watch all this play out. I'm going to see what happens with all of this. I don't know if the courts are going to stop this from happening. I don't know if Congress is going to. I don't know if the midterms are going to stop this from happening. I don't know if 3 years from now there'll be a new president and they're just going to get. What, do you say I'll just, I'm just going to sit here and get my popcorn out and if it costs me a little bit of money over the next couple of years and I'm wrong, maybe that's a better bet. I don't know.
Much closer to 4 years than 3 years. I know wishfully you're rounding down, but it's only
I would say, Andrew, I would say all of the above.
Yeah, but you'll know who the next, maybe you won't know who the next president is. But
I may say all of the above.
I know who it's going to be. It's going to be Trump.
I think just, and I'm not going to sort of speak for business leaders because we're not in that sort of unenviable position.
But a little bit of it has to be a bet on what they do, because if they sit on their hands for the next 3 years and basically say, no mas, I'm not doing anything, I'm just going to watch and wait.
I don't think it's 3 years, right?
That unto itself is a problem.
No, and I think, it sounds so trite, but I think it's the uncertainty around this that has been, I think, the most sort of deleterious from a investor perspective, from a business perspective. And so if we can get some more rules of the road, just in terms of direction of travel, and I think we're going to get more of that over the next maybe few months, but I don't think it's going to maybe come as quickly as people
if everything is a negotiation, then keeping everybody guessing is part of the plan, and maybe that never changes. Maybe that is like the rules of the road are look out, there's a lot of potholes.
Yeah, and from an investor perspective, maybe you just start pricing in that risk premium sort of going forward. Yeah. So there's going to always be this sort of uncertainty, trade policy. Pre-director head Ambassador Greer is going to be testifying today at 10 a.m. on Senate Finance. This will probably be the most watched Senate Finance USTR committee hearing ever because I think the markets are really looking for, again, kind of guardrails, and he likely will try to provide some framework. But again, I think there is going to be a lot of uncertainty regardless. It's just a question of sort of degrees, and again, trying to get some sort of framework around that uncertainty.
Libby, thank you so much.
Thanks.
Still uncertain, but a little more certain. A little more certain about the uncertain. How about that?
That's probably a true statement. We're more certain about the uncertain.
Yeah.
Progress.
All right, when we come back, shares of Levi Strauss surging on new results. The CEO also sharing her views on tariffs. What the retailer said right after this break. She spoke to Jim Cramer last night. You can see that stock up by close to 13% this morning. Squawk Box will be right back.
CNBC. Live ambitiously. Brian Sullivan joins Kelly Evans. Power Lunch. CNBC.
We speak to the world's most influential people.
I love what I do, and it means so much to me.
From celebrities.
When we took a break, I thought that was the end of it.
To the C-suite.
I started on the factory floor, and here I am 35 years later.
The economist and author Dambisa Moyo.
A lot of boards, many of the ones I serve on, went back to the drawing board to say, well, we need to do better here.
He turned a dream into a global brand.
Join the conversation on CNBC.
CNBC meets David Beckham.
For a long time, people wanted me to do the life documentary, but I'm not very good at opening up. The things that I've been through in the past, I've kind of put in a box, locked it up, and thought I'm never going to have to talk about it again. And I was happy with that. But I didn't realize how important it was for me to actually talk about this stuff. So I opened up and talked about things that I'd never spoke about before, like, injuries and worries and things that went on throughout my career, the sending off and how that made me feel.
When you talk about the sending off and the reaction to it, when you look back, what kind of mental resilience?
Well, I'm really glad social media wasn't around back then because it was bad enough then. It was challenging, and when I look back at some of the footage, some of the archive stuff I'd never seen before, and it was hard to watch, and I get emotional talking about it.
I see ambition as enriching your entire life, your financial life, your personal life, and the lives of people around you, your community. My ambition is to build people up.
Wow, that's exciting. People are not afraid to relax. Oh my God. So this is my family's go-to spot, and it's always so good. My name is Shaq Kubanoff. I've been living in Ho Chi Minh City for close to a decade now. This really is like the steak and eggs in Vietnam. I love Vietnamese cuisine because it like crosses lines all the time. Like, is this a salad? Is this a noodle bowl? It's somewhere in between, and I think that's really exciting when you see dishes like that. I was reluctant to show you this spot because I love it so much and I don't want it to get any busier. And it's so cool in Ho Chi Minh City because there's so many different styles of coffee shops, and no matter what you're into, there's something for you. If you want something that's a little more chill, there's absolutely that. Or you want something that has a lot of koi fish, they have that as well. We can't be in Saigon without talking about Cam Tam, or broken rice, which is like the dish of this city. After 10 years of living here, my palate has completely changed as a cook and as an eater. I love this kind of eating. This is what made me fall in love with Vietnam. Welcome to my neighborhood. Let me show you a few spots I love to go to in my downtime.
CEOs and other executives are trying to figure out if they need to recalibrate their strategies to navigate President Trump's new tariffs, or if the current uncertainty will be short-lived. Joining us right now is Mark Weinberger. He's the former CEO of EY and former Assistant Treasury Secretary under President George W. Bush. Mark, you say that CEOs are still broadly supportive of the general direction of this administration's moves when it comes to policies, but you say there's a really big but that comes with that. You want to explain?
Sure, Becky. Good to see you.
You too.
Yeah, listen, the direction of travel of the administration on fairer trading system, more efficient government, lower taxes, more rational regulatory policy, certainly relative to the past administration's approaches, is something the business community has supported. But the speed of action and the methods of executing the policies have caused great concern and destruction of value. And it creates a duration risk, like having a long-term bond that is out there, and the short-term spike in interest rates causes the reduction in the value of the long-term bond. You have to meet those short-term needs of new liquidity, new changes in directions. Your margins are hit, but you just can't do it quickly. That long-term supply chain and the long-term operations of companies are difficult to readjust in this time period, which means that businesses will have to pass on in some manner the costs of these higher. If you don't want to think of a tariff as a tax, it's a higher cost on business that has to be borne by somebody, and they're figuring out how to try and do that.
You sit on the board of 4 publicly traded companies: J.P. Morgan, Johnson & Johnson, Aramco, and MetLife. What are members of boards, directors on these boards thinking at this point? What are they asking? What do you expect to hear from managements? What can you possibly do as we wait and see how serious this is?
Yeah, Becky, we look at, what you could control in this environment. And what you need to do is you need to increase cash for the uncertainty. You need to slow down your decision making and understand the variables that are going into what a long-term investment would cost and how to unwind it, so your scenario planning expands. Some investments being paused. You can cut back on CapEx. You're reevaluating your supply chains, but you can't change quickly. Clearly, we're looking at J&J just announced a massive new investment in the United States, $55 billion over the next 4 years, above what they were doing. So lots of that, but really also, Becky, talking to our overseas partners, there's contracts that are being canceled left and right because if there is an alternative to a U.S. company right now that can officially provide a service or a product, those foreign counterparties are looking for alternatives because of the scenario of dealing with the United States and the uncertainty here. So remember, most companies, or at least the largest companies, more than 50% of their revenues comes from overseas, and that's still a very important market for us. And we don't know where that retaliation is going to be. The last point would be we're trying to just convey to the administration factually what will happen with these higher costs and what it will mean to us and how we're going to have to change our behavior, so it doesn't become an ideological issue. Factually, they understand what the implications of these are.
Mark, the jobs report that we got last week was actually a pretty good number. It was a month ago, so it's backward looking. Are the companies that you know of, are they stopping or freezing or slowing down on their hiring plans? Is this going to show up in the jobs market?
Good question. I think it really depends on the company, but I would say absolutely. You're looking at all your costs and trying to make sure that going into this really uncertain and turbulent environment where we're going to see slower growth and we're going to see higher costs, you can't just keep adding costs, and that will happen. The earnings reports, Becky, as you well know, for the first quarter are backward looking, so they're going to look pretty good, I think. The economy is still strong. Really haven't seen the reduction in job growth or even consumer confidence up to this point. We're now just starting to see a tip in both business and consumer confidence. But the guidance for the next quarter is going to be hard.
Yeah, that's what will the guidance tell us anything, or is it basically going to be like we just don't have any clarity?
Yeah, the guidance is going to have to be more general. The guidance is going to have to be dependent on externalities that businesses can't control, and I think analysts are going to have to understand that. So directionally, I think they're going to have to talk about what steps are you taking as a company to adjust to the current policies and where you expect them to go. What are you slowing down? I mean, in the big financial institutions, the M&A and the products are changing that we thought would be coming to market. And the assumptions we're making about the unemployment rate, the assumptions we're making about the growth rate are changing. That will affect outlook. But I don't think you're going to see a lot of prediction of specific earnings per share and revenue guidance because it's going to be very hard to do that.
Mark Weinberger. Mark, thank you. It's good talking to you today.
As always, thanks, Beck.
It is just after 7 a.m., 7:02 to be exact, right here on the East Coast. You're watching Squawk Box on CNBC. I'm Andrew Ross Sorkin, along with Joe Kernan and Becky Quick. And boy, do we have a lot going on this morning, including the Treasury Secretary is going to be joining us in just moments. Among today's top stories, China now vowing a strong response to President Trump's latest threat to escalate tariffs. The country's Commerce Ministry calling that, quote, a mistake on top of a mistake. And you ready for this? They're now saying, quote, China will fight to the end, unquote. Comments coming after President Trump saying he's going to hit China with an additional 50% tariff if China doesn't cancel its retaliatory 34% tariff. So we're going to be talking, of course, to the Treasury Secretary about that and so many other things. The futures right now, though, sharply higher this morning. The first time we've seen some green on the screen in several days prior to the market open. The Dow looks like it would open up higher, about 726 points higher. The NASDAQ, about 230 points. The S&P 500, about 80 points right now. Let's flip the board around, show you what's going on in Europe, because green also on the screen, and that may be spilling over to what's happening here. The FTSE up close to 2%. You're looking at the CAC up about 1.5%. Everything else in similar territory. Then take a look at this. Overnight in Asia, Japan leading the way higher. The Nikkei up 6%. That, I think, a little bit on the back of news that potentially there is some kind of negotiation going on with the Japanese, and that up 6%. You're looking at the Taiwan weighted, though, still down 4% for the morning. Meantime, let's get over to Dom Chu. He's got a look at this morning's pre-market movers. What's on the list?
A lot of them, especially those Mag 7 type names. We'll get there in just a second, Andrew, Joe, Becky. But we're going to talk about healthcare first, because that industry moving higher after the federal government announced an estimated $25 billion increase to payments to insurers that offer more Medicare Advantage plans to seniors. Payments will increase by about 5% in 2026. That's more than double the previously proposed bump. Companies, as you can see, like CVS Health, also United Health, Humana, Elevance, that offer some of these types of plans are all up roughly 5% to up about 11.5% for Humana. So keep an eye on those health insurers, everybody else out in there in that health ecosystem. Now, as part of the rebound pre-market, the bank stocks are making a bit of a comeback. They also outperformed yesterday. The biggest U.S. lenders like J.P. Morgan Chase, also Bank of America, Wells Fargo are moving higher, as you can see here, by 2.5% to 3%. They were down about 10% in the past week, more than 20% off its 52-week highs as well. We'll be watching some of these names later on this week when J.P. Morgan, Wells Fargo, and Morgan Stanley are set to report their quarterly earnings results before the opening bell. So keep an eye on those big banks. Outperformers yesterday. We'll see if that continues today. And we're going to finish on the big tech side of things. All of the names in the Mag 7 are higher pre-market and helping to kind of drive the rebound in the stock market overall. Apple has been the hardest hit of this group, with shares down about 19% over the course of the last 3 trading days alone. Those shares are up fractionally right now. Tesla and Meta were also hit hard with pullbacks of 17% and 11% respectively. Since the close, though, on Wednesday, before the tariff turmoil, the total market cap wipeout for the Mag 7 in total comes to roughly $1.8 trillion. And Andrew, just for some perspective, that's like in just the Mag 7 losing an entire alphabet in market cap for those 7 names across just those 3 days. So it's something to keep in mind as we talk about some of these big tech movers so far in trading today. We'll see if that sticks. I'll send things back over to you, Andrew.
Okay. Dom, thank you for that. We got a big interview coming up, right, Joe?
Coming up, Treasury Secretary Scott Bessent on tariffs, negotiations, market reaction, taxes. Should be able to cover all these things, hopefully. That interview's next. Squawk Box coming right back.
CNBC. Live ambitiously.
In the age of digital disruption, get fresh business perspectives on the fast-changing world of tech, innovation, and startups from one place. CNBC.com/technology.
How much would you pay for luxury travel? A week's stay costs almost $270,000.
It's on the list for $30,000.
From secret getaways to one-of-a-kind deluxe experiences and bespoke services all the way.
The next evolution of the luxury traveler is experiences. Experiences really that money can't buy.
This is First Class, only on CNBC.
There's a difference between ambition and greed.
Greed is wanting more. Ambition is wanting better, and not just better for yourself, for your family, for your community, for your country. There's no reason to want CNBC if you're not ambitious, right? If you don't want better insights, better returns. And that's not just financial, though money is a part of it. We're talking about value.
The climate crisis is a gun to our head, so we better get our act together.
We meet those at the forefront of creating a sustainable future.
Our work has been accelerating, and we've now hit 43.7 million people rather than kind of traditional charity. It's more about empowerment.
Climate change is like the internet. It gets bigger every year, it never goes away, and you have to learn to make money from it.
In the last 10 years, we've seen a very encouraging sign of much more products coming online into the market in terms of green and sustainable products.
An issue that affects every generation.
These kids, it's great they're fighting for their right to have a planet to live on. You've got to scream to be heard. You don't just sit politely and go, oh, I can have a conversation about pollution, please.
Soil is not our property. It's a legacy that's come to us from previous generations. It's very important we pass on living soil for future generations.
There is hope for the future, but only if we take action, and take action now.
Join the sustainable future, only on CNBC.
Well, don't look away, because on any given moment, things could change, and we're joined now, I'm very happy to say, by Treasury Secretary Scott Bessent this morning. Mr. Secretary, it's a pleasure to have you on. It's been a while. It's good to see you.
Good morning, Joe.
Market is trading higher today, and we did see what was welcomed yesterday, and that is a bounce from some of the lows and even a higher close on the NASDAQ. One of our guests, Mr. Secretary, earlier mentioned the resumption of the trade put. And not coincidentally, it coincided with your trip to Florida over the weekend, where reportedly you were stressing that the market needed to hear that negotiations about these tariffs were in play. Lo and behold, we did see a bounce. Is that a fair assessment? Do you think that's what happened?
Well, it's not a fair assessment of what happened over the weekend. I went down to see President Trump, as I do many weekends, and I can tell you it's all President Trump's decision, and he had a view on after Liberation Day that we should go into quiet mode and let our partners think about the kind of the shock and awe that he presented, and over those following few days from April 2nd, we had I think we're up to 70 countries contact the White House for how to come and negotiate. So, I would say that the negotiations are the result of the massive inflow of inbound calls to come and negotiate. Had nothing to do with the market.
I think the market took some solace, though, in kind of a change in the perspective. Just last week, we were hearing no negotiations. Now, we're talking about, you mentioned 70 different countries. We're approaching, Japan, I guess, was early in terms of placing a call to the White House. And now, in earnest, you and the U.S. Trade Representative are going to begin negotiations with Japan. I think that some of the stability in the markets, there's no doubt that's what I think helped massage the markets to some extent.
Well, look, Joe, my advice on April 2nd to our trading partners was not to panic, don't escalate, and then we will see where President Trump is after a period of days or weeks. The response was overwhelming, so it was after a period of days, and he decided that it would be a good time to begin negotiating. The Japanese were very good actors. The president had a very good call yesterday with the Japanese Prime Minister that led to these negotiations. And look, the Japanese are military partners, they're economic partners. We have a substantial imbalance with them, and I'm sure that they are as anxious as we are to get this remedied.
Mr. Secretary, we spoke yesterday with Peter Navarro, and he described his view on these things as it's not enough to get to zero tariffs. You have to take down all the non-tariff barriers that exist as well. His proposal, as he's written about today, is to get rid of the VAT, the value-added tax on top of a lot of other things, that is what it would take for us to reach any sort of a settlement with Europe. Are you in the same frame of mind as Peter Navarro is when it comes to that?
Becky, I think everything's on the table. So they're tariffs. The academic literature shows that it's actually the non-tariff barriers, which are both harder to quantify and harder to, they're more insidious because they're hidden, they're obfuscated. So tariffs, non-tariff barriers, currency manipulation, and then subsidies to both labor and industry. So everything's on the table, Becky.
Meaning that it would take all of those things for us to reach any agreement that would make any sense? I mean, the value-added tax isn't directed at us. It's a tax that every manufacturer, including those that are based in Europe, pay as well. It's more the equivalent of a sales tax like we impose here.
Well, again, I think there's going to be a lot of back and forth. President Trump is going to be personally involved in the negotiations, and we will see what our trading partners offer. For instance, there is talk of a big energy deal in Alaska where the Japanese and perhaps the Koreans, perhaps the Taiwanese would take a lot of the offtake and provide financing for the deal. So, that could be an alternative for them to come forward with that, because not only would that provide a lot of American jobs, but it would narrow the trade deficit. So, right. Becky, everything's on the table.
Mr. Secretary, though, help us just understand this, and maybe it's a very nuanced answer because there's sort of a different component parts to this. So the president said yesterday with Netanyahu, quote, that these tariffs can be permanent tariffs and there can also be negotiations. We also had Peter Navarro, as Becky mentioned, and you just talked about, saying that the whole goal of this is to bring manufacturing back to the U.S., and then there's been the discussion of trying to raise revenue as a function of the tariffs. All of those different ideas, to some degree, oddly enough, are at odds with each other, meaning if you're successful at creating revenue from the tariffs, you're not bringing jobs back to America necessarily, though that could be an offshoot of what happens. I'm trying to understand from your perspective whether these really are negotiations, they're not negotiations, what success at the end of the day actually looks like.
Well, Andrew, lot to unpack there, and let's just go through it piece by piece. That if we put up a tariff wall, the ultimate goal would be to bring jobs back to the U.S., but in the meantime, we will be collecting substantial tariffs. As I've said, I believe on this show that if we're successful, tariffs would be a melting ice cube in a way, because you're taking in the revenues as the manufacturing facilities are built in the U.S., and there should be some level of symmetry between the taxes we begin taking in with the new industry from the payroll taxes as the tariffs decline.
Mm-hmm. Let me ask you a separate question, and maybe you can speak directly to the CEOs and business leaders who are watching this broadcast, along with perhaps policy leaders and others who are frankly running other countries. I've talked to a number of them who say, you know what, I'm going to sit back and just watch all this play out. I'm not going to make any decisions about whether I'm going to bring manufacturing back to the U.S. or, frankly, how much I need to negotiate with this administration, this is now other countries, just yet, because depending on how the markets play out, depending on what you think is going to happen in Congress, depending on what you think is going to happen with the courts, all sorts of other things could happen first before I would need to make an actual decision as to either negotiating over the tariffs themselves, or if I'm a business, investing back in the U.S., because who knows what's going to happen, not just in 6 months from now, but in 2, 3, or 5 years from now, when maybe my plant would actually come on board or online.
Yes, so Andrew, that I think that may be what some of the countries are saying in public, but I can tell you I've seen the call list at the White House, and it's substantial. We were having a discussion last night about which countries to prioritize, and I think you are going to see some very large countries with large trade deficits come forward very quickly. I think we can, if they come to the table with solid proposals, I think we can end up with some good deals. And, part of the calculus on that may be that some part of the tariffs stay on. And I actually think, as I said, that over the weekend, President Trump has maximum negotiating leverage right here, right now. And I think it would be a mistake for anyone to think otherwise. And as I said, many of our trading partners, they have queued up, and they have kept their cool. They have not escalated, and they will get priority in the queue. I think it was a big mistake, this Chinese escalation, because they're playing with a pair of traditionally, if you look at the history of the trade negotiations, we are the deficit country. So what do we lose by the Chinese raising tariffs on us? We export 1/5 to them of what they export to us. So that is a losing hand for them.
What about the business leaders who are watching right now, who are thinking to themselves, am I supposed to actually make a commitment right now to bring manufacturing back to the U.S., or should I let this ride and watch all of this play out first before I make any kind of decision?
Well, Andrew, as you know, unlike we financial market operators, business leaders, they have substantial lead times. So I am sure that they are putting together plans for what they would like to do when we finish these negotiations. So I think, again, they're not going to snap their fingers, find a greenfield site and build a factory, but I am sure that the planning has already started in boardrooms, because I spent the weekend talking to CEOs and investment bankers, and that's exactly what's happening.
Mr. Secretary, the actual tariff rate on Japan is 4.3%. The number that President Trump's chart used was 46%. There has been a lot of conversation about how some of the numbers were arrived at, and using that formula, which puts a lot of weight on trade deficits to try to take into account all of the other protectionist policies. But there was kind of a lot of blowback on that formula. Do you think that accurately represents what we're talking about, or was it an actual intentional effort to make things look worse in terms of the protectionism, so that the United States, so President Trump could start at a much higher level for the retaliatory tariff?
Well, Joe, a couple of things. I think if you look at the actual numbers, President Trump cut those in half. So, if we wanted to create a canard to have a large a non-credible, or the very extended negotiating position, we would have started from the actual number. And I believe that by cutting it in half, then we have shown some willingness. President Trump believes in trade. He wants to have fair trade for the U.S. I wasn't involved in the calculations of the numbers, but what I can tell you is that we can see from these huge surpluses that some of these countries have, that they've accumulated these gigantic surpluses over the years. That has to tell all of us that there are imbalances. And again, whether those imbalances are from the actual tariffs or non-tariff barriers, currency manipulation, or the state-favored funding, it's very difficult to disentangle, but those big surpluses tell me that there is a large imbalance, and President Trump is committed for the American worker to fixing those imbalances.
We're going to let you go, Mr. Secretary. I just wanted to shift a little bit to the notion that maybe in trying to extend the tax cuts from the 2017 bill, that maybe the top rate, that there's some openness with Republicans to raising that, letting that go back to over 39 or even 40%, And I don't know whether the president has signed off on that or whether he's amenable to it. I don't know whether you would be amenable to that, because it would raise the taxes on all kinds of small to medium-sized corporations if it went back there. Is that being considered?
Joe, what I will tell you is I along with NEC Chair Hassett, have the pen for the administration. We're in contact with President Trump. We have seen remarkable unity led by the president with the Republican leaders, with Leader Thune, Speaker Johnson, Senator Crapo, and Chairman Jason Smith on this bill, and it's moving very quickly. So I think the underreported story here is the Republican unity that President Trump has. I think we will see the shapes and contours of the bill in the coming weeks and days, but I have been very impressed by how quickly this is moving forward, and this will be the certainty on this. If we go back, everyone wants to talk about, oh, the tariffs are causing uncertainty. The thing I can tell you is getting this tax bill done quickly will give industry and American households incredible certainty.
It just seems anathema to the whole intent of the original bill back in 2017. And I mean, tariffs are like taxes to some extent, Mr. Secretary. So raising taxes there and then raising taxes the top rate. So you won't dismiss that. You won't say that that's not on the table. That is possibly on the table, raising the top rate.
I'm saying that we are negotiating. The House and the Senate are moving very, very, very quickly on everything.
Okay. Mr. Secretary, thanks for your time this morning. We'll let you go, and we appreciate it.
Good. Thanks, Joe.
Okay.
Still to come this morning, Congressman Ro Khanna of California. He will tell us about the early tariff impact on the major tech names in his Silicon Valley district. You can add up the losses in the stock market, although this morning markets have turned around and they're looking very strong. Dow futures now up more than 800 points. NASDAQ futures up by about 260 and the S&P up by 90. Also, Senator Rand Paul speaking out against the tariffs. He will join us at 8:30 a.m. Eastern Time. Squawk Box will be right back.
Singapore is deeply invested in the growth of Asia. We believe that Singapore will do well when our region does well.
The debt issue. We have a very severe supply-demand problem. That's a big deal.
And if you can't put the what and the how in a consistent, clear, and meaningful way, then you could end up with high levels of volatility and conflict.
No American voter will ever accuse Donald Trump of being weak on China.
The largest government, the largest economy, the biggest capital market in the world is now holding Bitcoin.
Sponsored by
What inventions have transformed humanity?
The wheel, the light bulb, the internet, and me.
Learn how to use AI to be more successful with CNBC Make It's new online course.
It's about how we embrace the technology.
What we're really talking about is automation of tasks.
You're going to feel like they were just always part of your life.
We'll give you examples and how you can use AI tools at work and in life.
Register at cnbcmakeit.com/AI.
The age of AI is now.
My mentor always told me that your career is going to be a marathon, not a race. Often, you're not the only one running, so learn from those in front, support those behind, and when it counts, win well and lose well.
But earlier, negotiations are open. It takes a long time. It's messy. But I think the EU will try to be constructive and positive about this.
Simon, the question is, to the extent that we're talking about that tax. I mean, part of this is the tariff piece, and then part of it is going to be VAT and all sorts of other component parts to this, and each country is doing a different thing. And so I'm trying to understand how they would be able to do it as a bloc.
Well, the EU can do a lot of things as a bloc. That's not a problem, Andrew. It's slow and tedious and a little bit boring from an American perspective, sure, but that they can do. The value-added tax is a massive red herring, or worse than a red herring. Value-added tax is not discriminatory against imports. It's nothing to do with trade.
Simon, I don't disagree with you. I'm just suggesting if you speak to the Treasury Secretary or you speak to Peter Navarro, they would argue to you that the VAT is a component part of their problem with what's happening inside the EU.
Well, Peter Navarro definitely says that. And I listened very carefully to what the Treasury Secretary was saying on your show a little while ago, and he was not saying that, Andrew. So that the administration, once again, needs to get on the same page, and the VAT is going to be a very important sticking issue with the EU. They're not going to get the EU to roll back or withdraw VAT. It's a massive, very important source of revenue. It's how they structure their entire public finances. That's a non-starter. And so the question, Andrew, is, are we really in a good faith negotiation? 0 for 0 would be a pretty good deal, actually. And there's other things you could get from the Europeans, other things we could give them. Or are the negotiations entirely fictitious and it's just going to be a shouting match, in which case I think we're back to a lot of problems for the world economy.
What do you make, though, of the politics inside of Europe as it relates to how they feel about the U.S. and how they feel about how this could all play out and how much leverage that would give the EU or not to make a deal?
Well, that's a great question, Andrew. Obviously, all of this is seen in the broader context of Russia, Ukraine, what's happening to NATO. Traditionally, the Europeans have been obviously very pro-American, very inclined to cut slack to an American president who might be facing various political pressures. But Mr. Trump is making these aggressive moves on Greenland, for example. They are not happy at all with his attitude towards Ukraine. They regard Mr. Trump as being something, I'm afraid to say, a bit of a patsy with regard to Mr. Putin, because the Europeans woke up some time ago to what Mr. Putin's true intentions are and why he doesn't actually want peace right now in Ukraine under current conditions. So this is a difficult starting point for the Trump administration, but the EU doesn't want a trade war. The EU will definitely do a 0 for 0 deal if that's on the table. That will be a pretty straightforward negotiation. That would bring a lot more confidence and calm, I think, to financial markets. And I think the ball is really in the administration's court to demonstrate that they're willing to negotiate in good faith with the EU. And then, of course, we come on to China, which is going to be much more difficult.
There's a piece in the Journal today, Simon. The president's foreign policy is doing irreversible damage to the greatest geopolitical brand ever created. Is the die already been cast? I'm not convinced that we're past the point of no return on that. And it was also pointed out to me yesterday that I think U.S. GDP's doubled in the last decade or something. Europe is flat. Who's getting screwed? I mean, who's taking advantage of whom? I mean, there's a lot of reasons why Europe is sort of mired in the muck, but that's the bottom line. Is we're doing pretty well globally as a country.
Look, Joe, we're doing great globally as a country. The headline numbers are very strong compared to any reasonable comparison, right? Some people have been left behind, absolutely. We need to do more for them. That's a totally reasonable issue. But the EU has got deep structural problems, which is what you're alluding to here. And they have not been ripping us off on trade. That's not one of the hot button issues. They need to invest more. They need to build more science and technology. They need to get stronger in various structural parts of their economy. We can help with that, but we can help by trading with them more, not by pulling them into a massive trade war. That's going to be bad for them and bad for us.
So then what's this? Why then, Simon? A campaign promise or I have thought, think if it was deregulation, close the border, cut taxes and shrink the size of the federal government, you didn't even have to do this necessarily, and you know, in the midterms, you'd probably gain seats. The whole thing is confounding.
But Simon, one of the things, I don't know if you were listening to that interview with Bessent, one of the things that I found so fascinating was whatever these negotiations are, they may ultimately, in a way, not actually be about tariffs at all, which is to say...
It can't be, I don't.
No, but if you were listening very specifically, he talked, for example, about could there be some kind of energy deal among some of the Asian countries, South Korea and Japan, for example, in Alaska, and whether you could create jobs in Alaska. And I mean, that has nothing to do with tariffs.
It might all be negotiated.
But the point is, it might be this sort of patchwork of deals, and maybe this is just some way to try to create leverage over the globe. Now, I don't know if that ultimately works, because I do wonder politically whether other countries start to look at this as some other kind of scheme, and I just don't understand it.
Well, look, Andrew, I think Joe's exactly right. That you can make this kind of deal already. That before Liberation Day, you could do energy deals. The global demand for American LNG, for example, is very high and rising. So we can be a stable partner. We can export a lot of energy. We can have a ton of investment in our country in energy resources or in manufacturing. And this was already happening before the massive tariffs were slapped on. So I agree with Joe. I think the tariffs are not just unnecessary, they're massively counterproductive. Best case scenario is we have some long, tedious, drawn-out negotiations which end us back with stuff we could have had anyway. And the worst case is that we destabilize other countries, their financial sectors. There are spillover effects to us. What's the point of that?
Simon, you're a very smart man. Thank you for joining us this morning.
Hence the Nobel Prize.
Hence the Nobel. But he gets told he's smart all the time, probably, at this point.
It just rolls off his back. I think he probably knew.
Can you do that part already?
Yeah, before we go to break, check out the futures. I'm trying to figure out whether whether the Treasury Secretary, their negotiation, that's the word of the day. Anybody that didn't give Frank Holland negotiation is the word of the day. Was not on the right track. And I don't think we heard anything from the Treasury Secretary.
We started the morning at 6 a.m.
600.
About 650.
Yeah.
Now you're looking at better than 1,000 for the Dow.
And the NASDAQ also.
And the NASDAQ's
That's significant.
S&P's up by 2.3%. So you're looking at some gains. The same thing was happening if you were watching Treasuries. You know, the yields started picking up too. I don't know which came first, which was the chicken or the egg here.
I'm saying it's under the Squawk Box.
Today's Forex Update is sponsored by Interactive Brokers. 150 markets, 33 countries, 27 currencies. Today's Forex Update was sponsored by Interactive Brokers. Trade worldwide from a single unified platform.
The day's top stories driving Wall Street. Brian Sullivan joins Kelly Evans. Power Lunch, CNBC.
In the age of digital disruption, get fresh business perspectives on the fast-changing world of tech, innovation and startups from one place. CNBC.com/technology.
Leaders from the world of sport talk tech.
You have technology that is now allowing coaches to reduce the risk of injury.
AI gaming is going to be one of the most fundamental disruptions.
And new growth opportunities.
There's an opportunity for us to come together, for players to play across different platforms. I think that's really wonderful.
What do you do while you're watching sports? Not everybody likes the lean back experience. People like to lean forward and engage.
Highlights from Converge Live, only on CNBC.
I've always had an ambition to do something I love. I actually got my degree in hotel and restaurant management, but I had a thing for numbers, and that's how I got onto Wall Street. I became a trader. I traded all different kinds of asset classes. The energy in a newsroom when there's a big news day out there feels a lot like the energy on a trading desk on Wall Street. There's a lot of activity. The stuff we do at CNBC means so much to so many people because it empowers you with knowledge and with everything that you need to make the right decisions.
But it's not, as you know, just hurting the tech companies. I mean, this is hurting manufacturers, it's hurting small businesses. It across the board has hurt the country without actually incentivizing new manufacturing to come here.
Do you get the sense that these are permanent tariffs, or do you think that this is a negotiation to try and get a better deal for America with all of these other countries?
The truth is, I don't know, and no one in the country knows, and that's part of the problem. If you're Mary Barra, are you going to go to your board and say, let me build new factories here, or are you going to think, well, Trump himself is saying that this may change in 2 months. His Secretary of Treasury is saying it may change by June. And then the problem is, even if they fix this, even if they take away the blanket tariffs, how confident are you going to be that they don't wake up in September and impose them again? And so there is permanent damage done because he has shaken the confidence and trust of the business community. By the way, many of them who gave him the benefit of the doubt. I campaigned for Kamala Harris. Many of them voted for Trump, and now they're shaken.
That's something we heard from Tom Lee this morning, just this idea of shaken confidence. What would it take to change people's minds? I mean, I think especially if the concern is that business leaders are not going to move forward with plans, they're not going to spend capital or commit capital, they may not be hiring as a result. What does it take to get them a little more confident to try and prevent a downturn in the economy?
Honestly, one, I think he needs a reset on his economic team. I mean, it just brings someone in who may share his view of restoring manufacturing, may believe that you need smart strategic tariffs in certain places, but will assure everyone that you're not going to have blanket tariffs again. You're not going to be tariffing allies. Bring in new people on an economic team. Assure the country you're never going to do blanket tariffs again, that was a mistake, and that you're going to look at things sector by sector and not have these kind of policies. You
mean kick out Peter Navarro and Howard Lutnick, who are seen as the two people who are most in favor of tariffs? What are you suggesting, Ro?
Well, Lutnick would be a good first step. I mean, you know, Lutnick, I don't like picking on people, but he was on TV on Sunday saying that by having these tariffs, we're going to be doing more screwing and assembling of screws of the iPhone. And today, I'd love Howard Lutnick to come to my district because, look, the screws and the assemblies of screws are like 0.3% of the iPhone's cost. You have the display, you have RAM memory, you have the camera, and I know Lutnick loves 19th century policies, but he should understand 21st century production. So he'd be a great start. And put in someone, there are a lot of people, they're Republicans, but hey, Kernan would be good. I don't know, I'm sure Joe isn't for all these tariffs. And so bring someone in who's going to have some common sense.
Congressman, I don't think the administration is going to necessarily be listening to you or any Democrats. What do you hear in Congress from your Republican counterparts? How do they feel about all of this?
You know, Don Bacon has been terrific. He's a Republican from Nebraska. He and I serve on the Armed Services Committee together. He's bringing forth bipartisan legislation to reassert Congress's right over the tariffs. We already have a few Republicans on board. I think it's going to get Republican support. I mean, this is something that affects farmers. It affects small businesses that rely on inputs. It affects manufacturers because they need a lot of the products that are coming into the country to produce things. Those have gone up. So I think this is the first time, actually, I've seen Republicans criticize the president.
You have your own bill that you've brought forward. You're calling it the Drain the Swamp Act. It brings back White House ethics rules that were gotten rid of. It's an interesting point, but I can't imagine that's going anywhere in Congress given the leadership structure right now.
Well, look, even some of the MAGA folks were for this, and it says that any president, not just this one, but going forward, that the White House officials should not get gifts from lobbyists. It used to be the rule. There was an executive order that was repealed. Let's just make it permanent. No gifts from lobbyists to White House officials. But, you know, right now, beyond that, I mean, obviously that's an issue of transparency. I just want an issue of competency. I don't care if they're Republicans. Just find people who've understood basic economics and understand that when you have blanket tariffs and start a trade war, that's bad for the United States and the global economy.
You're from California, Ro. I mean, I love you, but you know, preaching competence and great government and knowing what you're doing, knowing what you're doing economically, it's just rich. But that's my only comment. Just I don't know what you say about me, Ro. They might listen to me if I said it. But I did sort of say it about tariffs. I don't know why you don't just do deregulation, you know, keep taxes low, do DOGE, close the border. There's all these things. You'd be at 70%. Probably. I don't know. I'm not sure what the end game here is necessarily, Ro.
Well, Joe, I appreciate you calling balls and strikes on it because, even Reagan was very eloquent against
Milton
these kind of
Friedman.
blanket tariffs.
Right, I know.
And so, and I think Musk is having doubts about it from some of his Twitter feed. But look, the reality is I share the president's goal, and I know you do, of building us into a manufacturing superpower, having advanced manufacturing. But you need to develop the workforce for that. You need government finance for that. That's how Silicon Valley was built. NASA said, if you build semiconductor chips, Intel, Fairchild will buy them. And he hasn't come with a comprehensive policy of how we're going to do this. Instead, he spooked all these manufacturers, and they are not investing in building new factories. If that's the goal, the policy isn't working.
Like the whole idea, Ro, that if you build it here, you won't be tariffed. What happens if we get to 0-0 with everyone? Then you don't need to build it here. I don't get it.
That's the other piece of it. Even if you have the 10% piece, it's not clear that you still build it here. Even if you have a across-the-board 10% piece.
Right.
If you're Tim Cook, I'm not sure if you have a choice between India and here that you necessarily go hero. What do you say to that?
Well, this is why I think you need financing incentives that the CHIPS Act did. Look, China, and I don't think we should imitate them, but they're literally pouring trillions of dollars into industrial lending. And they're giving their companies money to go build new factories, new AI. It's not just the tariffs that are going to help our companies here. We've got to say, if you build it here, the government will buy it, at least in the beginning, to help it scale. We're going to help you finance. We're going to help you get the plumbers and electricians, the workforce that you need. We're going to help you get the technologists that you need.
But the conundrum is there's a labor cost. It's not just the talent. Look, there's a skills issue, no question. But then there's just the labor cost unto itself, which is to say that at least for the foreseeable future, it will be cheaper to hire folks in India than it will be to hire folks in the U.S. The question is, what's the delta between those two? But I would argue to you, I would imagine, at least over the next decade, if not longer, 2 decades, that the delta will be high enough that the marginal cost, even if you had a 10% tariff in place across the board, that you still might make the choice to effectively manufacture elsewhere and import.
Andrew, you're absolutely right about the delta on labor costs, but the one issue is productivity. I mean, labor is usually 7-10% of some of these high technology products and even the modern steel. And so if you have factories that have more robots, that have more automation, we can compete with productivity if they have financing. Now,
by the way, you're raising a very important point, Ro. Because the truth is, and I've heard a lot about this from technology leaders even in the past week, if in fact they do decide to manufacture more in the United States, it's not clear that it's going to necessarily help the job picture so much. Because the truth is that most of it, or at least a lot of it, will be done by robots. And that's a whole separate matter to think about.
I think it's completely right. I don't think we can be dishonest to say somehow there's going to be this massive spike of manufacturing employment. But what it can do, if you even have 500 people in a factory as opposed to the 5,000 you used to, is bring wealth. And it can bring wealth into communities like Johnstown, Pennsylvania, Galesburg, Illinois, Warren, Ohio. Yes, you're not going to have a 4,000-person plant, but now you have a 500-person plant, and people are looking after the machines. They're programming the machines. They're working if it breaks down. They're doing quality control. And we're bringing modern wealth and modern national security into the country. That would be a thoughtful thing. That's what I was hoping the president would do. I would have worked bipartisan to help on that, but blanket tariffs aren't the way to get there.
Congressman Khanna, thank you for your time, for joining us this morning, and we hope to talk to you again soon.
Thank you for having me.
It is 8 a.m. on the East Coast, and you're watching Squawk Box right here on CNBC. I'm Becky Quick, along with Joe Kernan and Andrew Ross Sorkin. The futures this morning have been pushing steadily higher. You're now looking at the Dow futures up by about 1,075 points. S&P futures up by 130. The NASDAQ up by 420. It does come after a complicated whipsaw of a day yesterday and some major losses over the last 3 sessions. But you are, again, watching some pretty strong activity to the upside this morning. It's coming as we are watching Treasury yields rise as well. The 10-year is now back above 4.2%, 421. The 2-year is at 379. Oh, also let's check on the volatility index at this hour. It's down by 13%, back to 40, which is still very elevated from where we were just a week and a half ago.
We would have thought 1,000 points is pretty good.
Yeah.
If we didn't know the market could go down 2,500 points.
Right.
Twice.
Right. Earlier on the show this morning, Treasury Secretary Scott Bessent joined us and had this to say on where the U.S. stands on tariff negotiations.
President Trump has maximum negotiating leverage right here, right now. And I think it would be a mistake for anyone to think otherwise. And as I said, many of our trading partners, they have queued up and they have kept their cool. They have not escalated, and they will get priority in the queue. I think it was a big mistake, this Chinese escalation, because they're playing with a pair of twos.
We will be speaking to legendary investor Ray Dalio. That's coming up in just a few minutes. We'll get his reaction to those comments and much more. Right now, though, we want to get over to Dom Chu. He's been taking a look at this morning's pre-market movers. And Dom, what's been driving the way for these additional gains we've seen this morning?
It's certainly the Mag 7 overall, but there are other key sectors that are in focus right now, Becky, to your point. One of those is actually healthcare, and most of those stocks are moving higher. And this is all after the federal government announced an estimated $25 billion increase in the payments made to insurers that offer Medicare Advantage or Part C plans to senior citizens. Payments will increase by about 5% in 2026. That's more than double the previously proposed bump up. So you got companies like CVS Health, also United Health, Elevance, some of those names that offer some of those Medicare Type C plans are all higher. Humana's, by the way, up by about 14% right now, so keep an eye on that health insurance side of things. Now let's check on the chip stocks, a big part of the story, also higher as part of today's rebound. NVIDIA climbed 3.5% yesterday. It's up another, call it 4.25% this morning. Other names, Broadcom, Taiwan Semiconductor, also ARM Holdings, also climbing. Now, the direct import of chips to the U.S. are exempt from Trump's latest tariffs, but most chip imports are, packaged and inserted into electronics overseas and then sold back across borders, meaning those electronics are still subject to the duties. But President Trump did speak to reporters last week and said that some kind of action on chips could be coming at some time in the future, so keep an eye on those computer chip stocks. And then the big banks, also a big part of the story. They also made a comeback yesterday. The largest U.S. lenders like J.P. Morgan Chase, Bank of America, Wells Fargo are all higher, but those shares are still down about 10% in the past week and more than 20% off their 52-week highs. We'll be watching a lot of these names later on next week when J.P. Morgan Chase, Wells Fargo, and Morgan Stanley all report their results before the bell. So, Andrew, keep an eye on the big banks, the chip stocks, and healthcare. I'll send things back over to you guys.
Okay. Thank you for that. We're watching prices of crypto right now. The U.S. Justice Department disbanding its National Cryptocurrency Enforcement Team. In a memo that was viewed by Reuters, the DOJ now saying it's going to largely stop targeting virtual currency exchanges and offline wallets. It will instead order prosecutors to focus on cryptocurrency cases with ties to cartels and terrorism. So we'll keep our eyes on that. Coming up on the other side of this break, you don't want to miss it. Legendary investor Ray Dalio is going to join us for our first on CNBC interview. Since the market downturn and tariff turmoil, we've got a lot to talk to him about. And then Senator Rand Paul is going to spend some time with us. He said, quote, tariffs and taxes and Americans are paying the price. He's here to explain what he means. As we head to a break, a headline for you. Reuters reporting that Micron will impose a surcharge on U.S. customers starting tomorrow to account for President Trump's new tariffs. Squawk Box coming right back.
My earliest ambition was to be a teacher, but I felt I couldn't afford it. My mother thought it was the highest calling, and I gave her a promise that one day I would be a teacher if I did well enough in life. It was my ambition, and I was able to achieve it. So now I can teach you so that you can be as ambitious as you want about whatever you want to do. CNBC is my home. If you love your work, well, maybe it's life itself.
Want to make some extra money, but not sure where to start? CNBC Make It will teach you the skills to earn passive income online. Take our new online course that will help jumpstart your business idea. Get expert advice and hear real-life success stories.
Soon, you'll have the tools that you need to start your own passive income business.
Learn how to start generating additional income right now. Register at cnbcmakeit.com/passive income today.
This is CNBC on assignment at L'Oréal's US Research and Innovation Center.
Pledge is to invent the future of beauty, and therefore to do that you need the future of research centers, and that's exactly what's being built here, potentially the blueprint for our future R&D centers around the world. And it's going to serve the USA, our #1 market, but not only, because here will be invented new formulas that will serve consumers all around the world.
With a competitive beauty market constantly evolving, innovation is crucial to stay ahead. Consumers now seek products that cater to their unique skin tones, textures and concerns rather than one-size-fits-all solutions.
Personalization is definitely the future of beauty. Real personalization is also what I would call the ideal curation, is giving you the most precise recommendation of existing products, but which combination will be perfectly matching your needs, your skin tone or your hair type.
One political order to another political order in which there's then classically great turbulence between the left and the right. And because of disorder, particularly in democracies, there's a lot of fighting because there needs to be cooperation, compromise, and so on. And we're in the process of changing that order. In addition, we have the international world order. International world order began in 1945. There's a war. You win a war. The dominant powers get to set the rules. That was a series of multilateralism, things like the United Nations World Trade Organization, World This and World That. And that multilateralism is then breaking down for unilateralism for the same reasons. So there are these three orders related to too much debt. Debt is money. Second, internal order. How does our system work? Who's going to get control of this problem? And then number three, in addition of the five main forces, there's also throughout history climate, acts of nature. Droughts, floods, and pandemics have killed more people and toppled more orders. And then there's also throughout history, man's inventiveness and new technologies, which is creating this transformative result.
Right.
The interactions of these is what's going on. So if we look at tariffs represent a dealing with the imbalances. The imbalance means we have a tremendous capital imbalance and a tremendous trade imbalance, which is unsustainable. And so that's the backdrop of this. Related to that is also the international conflict. How do you have dependency, mutual dependency? How can the United States be a safe country and not manufacture things and have to import them for China? Or how can China be safe in terms of having capital, an American capital? Those connections are breaking down. So that's the essence of the backdrop. When we get into the tariffs, I'm sure we'll get into it.
Well,
but that's
Ray, that's a great backdrop to understand the way you're thinking about it contextually. But let's go straight to the tariffs, which is to say, how do you think, therefore, they play out? Is there, given the history that you talk about, is there the political appeal, either here in the U.S. or elsewhere, for these tariffs ultimately? And from an economic perspective, as we're all watching the market today, it's gotten a little bit better, but obviously, folks have lost 10%. Someone said to me last week, this is like a wealth tax, except that nobody gets the money. In that, 10% of a lot of folks' wealth vanished overnight as a function of at least this discussion thus far. So what happens?
Well, mechanistically, it raises costs. It lowers revenues for companies. I mean, what does it mean for a company? It means costs are going to go up. revenue is going to go down, and capital is going to be harder to come by. And so, and then we're trying to replace manufacturing. I mean, I agree with the problems, okay, about the fact that we don't manufacture and that there is a problem with that. But there's a structural problem of whether we can manufacture. We have a population that basically 3 million people, 1% of the population, is incredibly brilliant. I mean, they go to the best schools, they come out, they make the unicorns, inventiveness, half of which, by the way, are foreigners. And at the same time, they are making the unicorns. At the same time, what we have is 10% of the population around them that's doing very well. The 60% of the population has below a 6th grade reading level. And it's tough to be productive. So when we agree with the problem, too much debt, Secretary Bessent and others agree we should get it down to 3%. We have to get the budget deficits down to 3% of GDP. This is not, we all agree on the problem. The question is, what do we do about it? How do you create that self-sufficiency? And so from a practical point of view, that manufacturing is very difficult under this sort of circumstances to create within the United States, yet it's needed.
So therefore you agree with the president, you disagree with the president? I'm trying to understand what the conclusion is here. If the president is watching you right now, if Scott Bessent is watching you right now, you're telling him what? This is a good idea? You're telling him abandon this idea? What are you saying?
I agree with the problem, okay? I am very concerned about the solution, okay? The practicality of the solution. In other words, I think that this is going to create not only the problem, the capital markets problem that I'm talking about related to prices going up, costs going up, prices, revenue going down, and capital problem. But I also think that this is going to create great sand in the gears of production worldwide. At the same time, I do agree that this interdependency, this issue of productivity in the world in which we have to be competitive and productive, and we're not competitive in producing things, is a longer-term problem, not an easy one. And I do expect that it is going to have political consequences. This is the nature of the cycle. It is coming also at the same time as we have a budget issue. Now, the budget issue is a comparably important issue. So as we look ahead in the months ahead, we have to get the budget deficit down to 3% of GDP. I worry about that at the same time as this is happening. These are not easy problems to solve, I'm concerned, because the bigger problems exist. The debt exists. You can't get around the debt. The overspending exists. You still have that. You still have that competitiveness issue. These have repeated throughout history. We're in a period that's very much like the 1930s.
You know, Ray, I think if China didn't exist, I'm not even sure we'd be in this place in terms of public sentiment for tariffs. Not very many people disagree that we need to do something, even with tariffs, to try to deal with China. And I know in the past you've talked about China, and there's been times where I thought you were kind of I don't know, not pro-China, but less hawkish towards China than a lot of people that we have on. But this is going to be the most, just look at the rhetoric in the last couple of days. This might be the most intractable part of this whole tariff, whatever this is that we're in right now, the age of the tariffs. But I don't know how you finally resolve things with China. I don't see an end.
I'm not ideological. I'm like a mechanic. And so when we're talking about this, I'm saying that China now, I'm agreeing with you. China now manufactures more than the United States, Germany, and Japan combined. It's a dominant competitive manufacturer in the world. And we have lost manufacturing. And we are then creating, we're the biggest consumers in the world. And so through this, we're financing that consumption with a lot of debt. So we have a very, very difficult situation.
Hey, Ray, what does this mean for, let's say, our purchases of our treasuries by foreign investors in the near term?
The supply, foreign investors as a group have large exposures in their portfolios, outsized exposures to debt in general, and to have too much in terms of U.S. debt. The quantity that we have to sell them, which is about 6.5% of GDP, is an amount that they don't want to buy, partially because they have too much, partially because also now this is a risky world for various reasons. Worries about sanctions. This all happened in the 30s, you know, the conflict between Japan and the United States and freezing assets, sanctions and such things enter into it. So there's a supply-demand imbalance, the quantity that exists of debt and the quantity that has to be sold of debt. That's just the supply-demand imbalance. As a result, we have to deal with that supply-demand imbalance.
But do you think that leads to higher yields? Because part of the Trump administration's plans seems to be trying to get lower interest rates so that you can lower things like the service for debt that we paid last year to the tune of $1 trillion. I mean, it seems to be, and that's something Scott Bessent, the Treasury Secretary, has even said in the past, it'd be nicer to have lower interest rates, not just to lower our interest costs, but to also help the bottom 50% of Americans who have a lot of debt relative to their pay. Are we going to get to that point?
Exactly. But there are two ways you lower interest rates. Yeah. You lower interest rates by improving the supply-demand balance, or you lower interest rates by forcing them down and printing a lot of money. Those are the two ways, right? So there are three parts of the balance that we should think of. There's spending, there's taxes, and then there's interest cost. And if they were to lower achieve a better balance, and I'm not saying which way to do it, that's political, that's up to them. But if they were to improve the supply-demand balance, that would lower interest rates in a fundamentally sound way, and that would make the deficit. Right. So there are three ways that you can achieve that 3% of GDP target that I believe needs to be shot at.
So
but
Ray,
you just can't make interest rates go down. It's not healthy to make interest rates, force them down by creating unnaturally low interest rates and printing a lot of money.
Right.
So that's key.
So Ray, let me ask you just the very direct question that I imagine everybody who's watching this right now wants to know. Inside Ray Dalio's brain, as you're watching these markets play out, do you say to yourself that the markets are overpriced, fairly priced, underpriced? Is this a falling knife that you want to catch? Is this a great bargain that you want to buy? How should the public think about this in this moment?
The public, I don't want to come on your show and market time and say buy, sell, and something. Here's what I want to tell the public, and so on. You have to have a balanced, well-diversified program and a game plan that you carry through over time. In my period of time of being an investment manager, I've seen the World Trade Center go down. I've seen 2008. I've been through all of those. The most important thing is to be able to have a well-balanced, diversified portfolio that you know exists. And how to do that is a subject. I just put out a course. I won't get into it. But how to diversify. Also understand what you don't know. By understanding that you can't time the market, you're not going to be successful. You're going to react emotionally. So what you should do, what I started to do when I was, didn't have the financial resources, I think, how much money do I have saved if I didn't get any money coming in? How many months could I live on the money that I have? How many months? And then how many years could I live on the money that I have? And then I divide it in half if it goes down 50%. Once you're in that position where you can establish your safety in terms of a diversified portfolio, that diversified portfolio means don't think cash is safe, because cash is the worst investment that you can make over a period of time. And you have to look at your buying power in inflation adjusted terms. And so, for example, if the Federal Reserve drives down the price of cash and prints money, you're going to lose buying power, as you have recently lost buying power as a result of doing that. So have a well-diversified portfolio and also be very concerned about the debt issue.
Ray, want to thank you. It's great to see you, and I hope you come on back as we're all trying to figure out where this all heads. Thanks.
Thank you all.
All right, still to come, 2 healthcare-related stocks moving in the pre-market. We're going to tell you what's going on after the break. Then, Senator Rand Paul was one of the first Republican senators to speak out against tariffs. If you had to pick someone that might do that, you might have thought it'd be Senator Paul. I'm trying to figure out, what would be iconoclast? What is he, a rebel, a free thinker?
He's unique.
He is unique. Yeah. He's going to join us shortly. We'll be right back.
Today's Most Active Stocks Update is sponsored by Interactive Brokers. 150 markets, 33 countries, 27 currencies. Today's Most Active Stocks Update was sponsored by Interactive Brokers. Trade worldwide from a single unified platform.
Squawk on the Street, CNBC.
I was studying molecular biology, going to grad school. I started investing a little money for my dad, and I got bitten by the bug. I was a stockbroker, and it's fun, but we all wished we could just follow the markets and talk. My ambition was to be able to pay my bills and not have to constantly be selling. In today's world, I would urge a lot of people to get financially savvy. Squawk Box and CNBC, it is my home. It's the greatest job in the world.
Good money.
Everything seemed legit until it wasn't.
Good times.
The lavish lifestyle, the houses that they're used to.
Is never enough.
Someone who has a goofy social media presence could be laundering $4.5 billion worth of Bitcoin.
Fame, fortune, and fraud.
His stories were so good, they've all fell for them.
I believe in getting justice.
American Greed on CNBC. The biggest names in business.
It was a really good quarter.
When it matters most.
This growth was driven by transactions.
Before they talk to Wall Street, they talk to John Fort and Morgan Brannan. Closing Bell Overtime, weeknights on CNBC.
But I have a trade deficit with my grocery store. The people who employ me, if I work for Corvette and they employ me, they have a trade deficit with my labor. They buy my labor and I never buy their cars. So you can have this artificial accounting and it makes it look like a bad thing, but you have to ask yourself, is trade good or bad? And if you look at the trade deficit, in times of a recession, the trade deficit goes down. So if the tariffs push us into a recession, we could reduce the trade deficit because we're all buying less stuff. We have to get back to the fundamentals of, is trade good or is trade bad?
Senator, you are maybe getting some support and some praise from Democrats, but the support and praise from Republicans, you're saying that you're getting it, but these are individuals that you don't even want to be on the record for saying that. Is that fair to say?
It's a quiet whisper, and people come up to me in the hall. You know how in Atlas Shrugged, they would come up and say, "Who is John Galt?" They whisper in my ear, "Free trade is good. Keep going, keep going." But they don't want to say it because of the politics of it. And look, when I put free trade articles on my Twitter account, I get mobbed. I mean, I get what they call ratioed. I get more comments than likes, which they say isn't good. But we have to have this debate, and people have to understand that trade is between individuals, not countries, and it's a false accounting. So I'm committed to this. I'll keep talking about it. And there's one graph, if you look at it, and it has trade. Trade for the last 70 years went up exponentially, international trade, but so did GDP per capita. We get wealthy with trade, not without trade. It's such a fundamental debate that it's worth having.
And I get all that. So it's almost like it was almost like a creep. Okay, what about some targeted tariffs? Okay, well, let's do it this way. Well, you know, what about China? And then there's fentanyl, and you could sort of see the creep, right. Mission creep, or whatever you call it. Now we're at across-the-board tariffs, and even Republicans that in the past would have called themselves Reagan Republicans are kind of going along with it. How does it end?
Tariffs, like sanctions, are good until they're applied. Once they're applied, they're of no value and they're a detriment to the economy. But if you threaten tariffs and you get other people to lower their tariffs, you can say, oh, this is wonderful. If you threaten sanctions and you can get a country to change their behavior, that's wonderful. If you have them in place, they're only of value if you can remove them. So if you can remove tariffs and lower tariffs and get, you know, more equal tariffs, that's good. But we have to start from talking about the truth. One of the things they say with Canada is, oh, there's a 270% tariff on dairy products going from the U.S. into Canada. Well, you know what the real tariff is? Zero. That's a big difference between what the truth is. So there's a certain amount of goods, dairy goods, that go to Canada every year, and they go at 0%. If we exceed a certain amount, there's this ridiculous 270% tariff, but we've never encountered it, and the USMC renegotiated it and raised the level that's under zero. Trump should be congratulated for USMC raising the amount of dairy that goes in at zero, but we have to have an honest debate. We can't go around saying that there's a 270% tariff when that's not really the truth.
Senator, we had Ray Dalio on talking about how he understands why we got to this point. There are sectors of the sections of the country that have gotten hollowed out by free trade. People who lost their jobs, industries that left towns upended. What could and should we do to help those who have been hurt by free trade if it's not tariffs?
The middle class, if and when they've been hollowed out, have been hollowed out by free spending, by debt and inflation. So the last 4 years were difficult for the middle class, and they lost ground, and the average family income went down because they lost purchasing power. Their wages didn't keep up with inflation. Inflation comes from debt. It's nothing to do with free trade. Trade is proportional to wealth.
What happened, Senator, over the last 50 years, losing 60,000 factories? What should we have done about that? You can see where the president's coming from.
Yes and no. If you look at the last 60 or 70 years of household income, the lower class under 50,000 shrunk slightly. The middle class shrunk slightly. And you know where they all went? To the upper class. Over $100,000 category tripled in constant dollars over the last 70 years. The truth is just, we have to discuss the truth. The middle class shrunk slightly, but they became richer. So, you know, there's so many good facts on this. Steven Pinker's written about it. Humanprogress.org has written about this. We have to work on facts, and it's the job really to point out fallacies. It is a fallacy that people have gotten poor. The world is richer than it's ever been. 100,000 people leave poverty every day. I mean, it's extraordinary, the phenomenon of capitalism, but trade is an integral part of capitalism. Yeah. Trade is just voluntary association. It is part of capitalism.
We learned all this. I mean, what would the world look like without comparative advantage and everything else? Are we rewriting the rules of capitalism? It's crazy.
Well, that's why we can't give up on this. This isn't me versus Donald Trump. I like Donald Trump. I've supported most of his cabinet. I'm a chairman of a committee. I've pushed his people through. Will continue to do so. I want to cut spending. I want to balance the budget. I support so many things, but I can't support a fallacy that is going to make us lose our wealth. I have a retirement account too. I want my retirement account to stay there, and I think tariffs is going to decimate it.
Okay, so Senator, I got maybe a difficult question. If you were to advise the leaders of foreign countries that now have to negotiate with the president, what would you tell them to do? Would you tell them to ratchet things up? Because ultimately you think these tariffs are a bad thing, and maybe that would force the president to stand down? Do you think the president looks at the market and says that he has less leverage, more leverage? How would you think about it in that context? And then separately, I'll ask you later what you think the CEO community that's thinking about where they're supposed to invest and what they're supposed to do in this moment are supposed to do.
Right. You know, I'm fundamentally an American. It's hard for me to take the side of another country, but like a CFO has to do that. So if you're a CFO or a Treasury Secretary of a country, you have to do it. When you argue for a trade war is based on emotions, not facts. So the trade war won't make them richer. The trade war will say, damn it, we're going to get even. We'll get even with those SOBs, but it doesn't make the foreign country richer either. The smartest thing actually would just be to keep your tariffs low and let the U.S. founder in their problems. But the thing is, that's not what typically happens. Emotions take over, and right now is ratcheting up. But I can tell you this, if people care about the freedom of those people in Taiwan, they shouldn't want to cut off all trade with China. Okay. At the moment there is no trade with China, that is the moment that Taiwan will be taken by force.
Senator,
the main thing that keeps Taiwan as free is trade.
I couldn't get the Treasury Secretary to take a hike in the top rate for individuals, which we know a lot of small companies and medium-sized companies pay that rate, all the subchapter S's and pass-throughs, et cetera. I mean, is that going back to 39 cents, whatever it was, or even above that? And that would go along with Republicans suddenly like tariffs and like raising taxes on corporations.
I think there's more consensus on the taxes. I'm very hopeful that the taxes become permanent, the tax cuts from 2017. I supported them. I would have voted for them to be permanent. Yeah, I want to keep them the same or lower. No, keep them the same or lower. I'd be for lower as well, but I'm not for letting them go back up.
No, you don't want to raise the highest rate, do you? There's Republicans talking about raising the higher rate.
Yeah, I don't want to do that. The 2017 tax cuts brought the rates down. Let's at the very least keep that. But I will tell you that the whole thing's been muddied up because they want me now to vote to raise the debt ceiling $5 trillion, which is irresponsible. And really, then we have no levers to watch the big spenders. I propose that we raise the debt ceiling 3 months and do it every 3 months and keep voting on it until they behave themselves and quit spending so much money they don't have.
Senator, you are so unique and so independent. You're such an independent thinker on things. Has the administration spoken with you about any of these issues? Because sometimes you agree with them, sometimes you don't. You come at it from your own perspective, and there is no dogma when it comes to you from a political spectrum.
You know, I consider that I still have a good relationship with the president. I love playing golf with him. I've played golf with him a dozen times. I saw him at Mar-a-Lago a month ago. I communicated with him last week. He does communicate with me sometimes in all caps that I need to get it together and understand how good tariffs are. But we can have disagreements because to me, there are things in this town that are fundamentally partisan. The impeachments they did were horrific, and I led the fight against the impeachments and would do it again. I supported Donald Trump, do support Donald Trump, but I don't support the tariffs, and I don't support debt. And so I have to fight those battles, or who would I be, or why should I be here if I'm not willing to fight for what the people sent me here to do?
I was thinking how smart your dad was. He named you after Ayn Rand. And then you said Atlas Shrugged, but that's totally fake. I'm going to start that rumor now. Wow, what a cool name, Rand. Your name was Randall, and people called you Randy till your wife started calling you Rand. So you can't, don't.
Yeah, that's right.
It's not from Ayn, not from Atlas.
why change an urban myth when it sounds so good? It's
Beautiful.
better than the truth. It's much more interesting than the truth.
It's so much. I'm going with it. In fact, I'm gonna forget that I even found out it wasn't true. Senator, thank you. From the great state of Kentucky. Almost as good as Ohio, but it's something to aspire to. See you later.
Coming up next, a couple of big movers in the pre-market this morning, and then we're going to talk market strategy with longtime Oakmark portfolio manager David Hero. Squawk Box coming right back.
Frank Holland, Worldwide Exchange, CNBC.
Master the art of salary negotiation.
Everybody who walks into a salary negotiation is nervous.
Salary negotiations are really awkward.
The number one soft skill is flexibility,
preparation,
confidence.
Learn how to negotiate a higher salary with CNBC Make It's new online course.
I'm going to give you a roadmap for doing the hard work.
Because ultimately, if you don't fight for yourself, nobody else will.
Register right now at cnbcmakeit.com/salary.
Good money.
Everything seemed legit until it wasn't.
Good times
The lavish lifestyle, the houses that they're used to.
is never enough.
Someone who has a goofy social media presence could be laundering $4.5 billion worth of Bitcoin.
Fame, fortune, and fraud.
His stories were so good, they all fell for them.
I believe in getting justice.
American Greed on CNBC.
Leaders of business and tech talk AI. Name another industry that has a $10 trillion total addressable market. That's why everybody should be excited.
There's an accessibility to generative AI. It's unlike any technology that we've seen.
And its impact on the way we'll live and work.
To make sure that we are skilling up everyone is something we owe to society.
It's not AI or people. It's AI with people. And that will cause an economic boom.
Highlights from Converge Live only on CNBC.
To me, a long-time portfolio manager, David Hero. No? Even with me?
If I really told you what.
Squawk Box will be right back.
CNBC. Live ambitiously.
The Bond Report is brought to you by PIMCO. The Bond Report is brought to you by PIMCO.
Wow, that's exciting.
People are not afraid to relax.
Oh my God.
So this is my family's go-to spot, and it's always so good. My name is Jack Hubin. I've been living in Ho Chi Minh City for close to a decade now. This really is like the steak and eggs in Vietnam. I love Vietnamese cuisine because it like crosses lines all the time. Like, is this a salad? Is this a noodle bowl? It's somewhere in between, and I think that's really exciting when you see dishes like that. I was reluctant to show you this spot because I love it so much and I don't want it to get any busier. And it's so cool in Ho Chi Minh City because there's so many different styles of coffee shops, so no matter what you're into, there's something for you. If you want something that's a little more chill, there's absolutely that. Or you want something that has a lot of koi fish, they have that as well. We can't be in Saigon without talking about Cơm Tam or broken rice, which is like the dish of this city. After 10 years of living here, my palate has completely changed as a cook and as an eater. I love this kind of eating. This is what made me fall in love with Vietnam. Welcome to my neighborhood. Let me show you a few spots I love to go to in my downtime.
Before the opening bell on Wall Street, and we are seeing the market sharply higher. Dow futures indicated up by more than 1,000 points. S&P futures up by about 125. The NASDAQ indicated up by 400 points. Joining us right now is David Harrow. He is Oakmark's CIO, International Equities and Portfolio Manager. And David, why do you think the markets are higher today?
Well, I think some of the uncertainty regarding tariff policy, and the uncertainty is whether someone believes that the tariffs are really going to be a good long-term solution to clear a trade deficit, or are the tariffs being used as a bargaining chip? And of course, I mean, this is bifurcated. It's one way or the other. And the first way to use this as a device to erase a trade deficit versus a bargaining chip, I think was seen as very destructive. And now there's evidence that perhaps it is being used as a bargaining chip.
Does that give you the confidence to think that this is a place people should buy in?
Whether we buy in today or tomorrow, we behave as long-term investors. We sit back, we value businesses based on fundamentals and cash flow streams, and we try to take advantage of moments like this, exactly when there's so much fear and panic in the markets, driving prices of the equities moving in a very different direction than underlying intrinsic value. So whether a particular day, a particular moment in time is a buying or selling period is moot for us. What we really look for is the difference between our measurement of intrinsic value and where Mr. Market prices something every second of every trading day. And it often, of course, provides us with opportunities. One of the things we've seen in the markets over the last decade is the weight of money going into very, very narrow areas, the U.S. and U.S. growth in particular. And I think what we're finally starting to see is some leveling out of this. And places like international and domestic value, which have been ignored over the last 10 years. So I think diversification pays off, and instead of trying to trade every short-term movement, I think investors should look where values actually exist. And where they existed are pockets of the global equity markets that have been ignored over the last decade. And now we're starting to see the first quarter, there was some pain to ignoring value investing. There was pain to ignoring international investing. And perhaps now we're finally starting to see this. And I think this is what investors should be looking at, is where they could take advantage of situations where the market structure was extremely lopsided, and we're starting to see a leveling out.
David, you sound downright enthusiastic this morning, so we will end it on that note. Thank you for joining us today.
Thank you for letting me on my favorite program.
Oh, we hope to see you again soon, David. Thank you. Folks, that does it for us today. We are sharply higher this morning. Squawk on the